Welcome to a capital hungry breakdown and swing trade analysis on euro against the US dollar. We're going to be starting out from the 3-month time frame, going down to the intraday time frames, mapping out some potential higher time frame, long-term investment trade ideas, swing trade ideas across this pair. We're going to be dissecting some of the market structure, price action, buyers versus seller strength, as well as the macro and micro fundamentals that have been actively impacting this pair and both currencies involved, and then using that to our advantage to potentially roadmap some higher time frame trades. So I'm just going to start out by mapping some market structure and identifying some historical repetition as well. So all I'm doing is identifying this higher time frame wedge pattern we have been in, where we are potentially starting to get the break out of the wedge here after failing to break these historical low points and very strong demand area. You can see even when we had Brexit negatively impact the Eurozone from this point on in this massive sell-off, this was an area of price sensitivity where buyers re-entered the market, and we have failed to break this area even when we had the pandemic and COVID come and hit the markets, of course, right? So what I'm starting to see is a potential break out of this higher time frame bear structure as markets are still very optimistic. A very strong respect to this higher historical demand area as we failed to break there since 2015. You can see we had a very strong reaction at these previous lows and this price sensitivity area here to the left, which gave us this pullback. But this pullback, even though it was extremely aggressive, as we start to dissect the market structure and repeat of history, it has not been as aggressive as this move when we previously reacted to this price area sensitivity. So just from a macro perspective, obviously, as long as markets stay optimistic and we have the Federal Reserve providing continuous support for the US economy and keeping interest rates as is, this does mean that the dollar will be on the higher time frame bearish side. And especially when we're looking at the dollar index movement and we've been observing it, it still is very bearish on the higher time frame. And if we have a continued flood of vaccine headlines and economy starting to open back up and that economic recovery stage, as soon as we come above these previous highs and clear out, there's a very strong upside move to correct this impulsive sell and swing trade EU from these macro lows up to these previous historical high points, right? So now I just want to start dissecting the market structure because dissecting the market structure and price action on the other time frames, just because we haven't had any fear, uncertainty, or doubt to shift me out of this higher time frame buyer's bias. The only thing I was iffy about before was the potential of this historical repetition, where from these strong buy demand zones and favored prices on EU, you can see previously we had this extended upside move where at this area of interest, which was the previous lows to the left, that I was just showing you guys on the 3-month time frame, we had an extremely strong sell-off at this 2018 period that engulfed the previous two upside candles worth of price action, also broke that higher time frame bullish market structure, and then proceeded to come right back down to these demand areas, right? But I don't see that happening just yet, because even though we have reacted technically to this price point again and saw buyers exit out positions as they were holding from these lower demand areas, that pullback did not engulf the previous upside candle on the quarterly time frame, and we still didn't really break that higher time frame bullish market structure just yet. Right? So if markets still remain optimistic, and as we zoom down the time frames, possibly above 1.20 flat, we can find some very favorable swing opportunities if we have a continued flood of vaccine headlines. Like, we're already seeing headlines that Germany's going to buy Sputnik V from Russia. They're also going to be buying the AstraZeneca. You know what I mean? If you guys look at the newsroom. So we're having a continued flood of vaccine headlines. We still have Brexit optimism very much active, and the US dollar on the higher time frames, when you look at the 4-hour structure, as we have over and over again is still very bearish. And also, even safer, if this 3-month quarterly candle was to push all the way back up and start breaking these highs, you know this was just a pullback for buyers to get in from a more favorable demand area. And there's a lot of room for upside to correct this move to the left here as a swing trade potential. But overall, unless we have any fear, uncertainty, or doubt, and as long as the dollar relatively stays flat with the continued money supply increase of the Feds to support the U.S. economy, and we still have overall market optimism, which would just decrease the demand of the U.S. dollar as a safe haven currency and increase the amount of liquidity going into equities and the risk currencies, especially from these historical demand lows. We saw GJ get bought up from its lows, GU get bought up from its lows, and having that repeat of history as well. This was a very aggressive reaction to these previous low points. So we just had to be very mindful of that as we were observing that very aggressive pullback and taking profit of buyers from those high points. But it's still looking very bullish on the higher time frames, in my opinion, from a fundamental standpoint and as per the structure. So here, look at the difference. This is what I was a bit worried about. Was here, once you had this candle go to revisit these previous candle body lows, you can see you just essentially started to melt below after having much stronger signs of exhaustion here. Like you had a bearish candle, a weak bullish candle, an engulfing bearish candle, then a very aggressive bearish monthly candle. I did not want that type of same historical repetition from that standpoint. Now, when we're drawing a similar type of trend line to identify structure, you can say, oh, gee, but it's breaking structure. No, because same type of idea. This was those previous candle body lows. And for one, this is very bullish price action. It was the exact same thing that happened here. If we delete this, and I just put like a green box just to show that upside move from here to here and from here to here is identical. Right? What's good so far that's going to show us potential for still further upside and that we can bounce from this area is the fact that we haven't broken below this low yet. And the exhaustion from the upside wasn't as aggressive. Here you had 2 weak bearish candles, 1 strong bearish candle, but it came right and closed at this price sensitivity area. The only thing we have to be mindful of is that intraday bearish market structure is still being heavily respected on that pullback side. And we don't want this quarterly candle to end up just creating this upper wick or this monthly candle, sorry, and closing somewhat like this. Right? So look at this. Look, see how this area of price sensitivity was created here with the candle bodies, and that's where the wick was created. Then you flip bearish, and from that point you couldn't break above, and then that more stronger intraday bearish market structure was respected, and then you finally have this very strong sell side move below to revisit this demand area, right? So something very similar here. The safer swing buys would be above 1.2 for that reasoning. Do you understand what I'm saying? We would need to break above this area and that intraday bearish structure and show more buyers momentum after failing to break these lows. So the safer swing trade buys, I'm going to put an alert and I'm going to map out the structure better right off the bat. And especially when we look at the weekly, I'm identifying 1.2 flat and above previous highs at 1.122, 200 pips up. Okay. Swing trade sells would be below 1.16 with this potential repeat. If we have any fear, uncertainty, or doubt, type it. Fear, uncertainty, you guys get what I'm saying. it's hard to type with this thing. Which would cause US dollar increase, risk currency weaker. Okay. And below 1.6, then we take swing sells down. So I want to identify these 3 price points right off the bat. $1.22, 1.2, and 1.16 are extremely significant flat price points. Okay. If we have continued optimism, vaccine headline, flood of vaccine headlines, economies opening back up, and we break above that intraday bear structure and above 1.2, swing buys, and above previous highs, swing buys. Start looking to correct and play some long-term positions. Okay. Any fear, uncertainty, and doubt with a weak monthly bearish candle close and a repeat like this, then we're taking the sells right back down to this demand area and we're having that repeat. But so far, we don't have that sequence of events to say, hey, it's a sell. We don't have the fear, uncertainty, and doubt to say, hey, it's a sell. And we do have continued market optimism. And so far, respecting this area for now. So I'm going to map that out a bit better. $1.22. What the hell? Where's all the alerts? Where's all the Euro USD alerts? Anyways, 1.22. When we play this bearish market structure all the way right there, we'll say 1.199 here. The sell, swing trade sells will only be if we continue to respect that bearish structure and break below 1.63. 1.163. So this is a bullish structure similar to here, where you could see it got broken. The trend line got broken, but structure wasn't invalidated until this previous low was cleared out. Okay. So even though this bullish trend line is broken, we didn't clear this previous higher low where we went up to print a new high. You understand? Let me make that yellow. And people say, oh, the markets are random. You can't predict the markets. Like, look at this movement and alongside the fundamental sentiment, you know? But yeah, we can't say bullish structure on the higher time frame is broken until like on the weekly or monthly time frame, even the weekly, even the daily, that we have candle closures below 1.163. We don't have the fear, uncertainty, or doubt or reasoning for that yet. But once we break above 1.199 and 1.22, those higher time frame swing trade buy potential is there. And let's look at the historical repetition on the weekly. See, we had a much stronger liquidity zone here as well. And look here, when we went to revisit these lows, we had very strong impulsive sellers candles. We actually broke and retested below the lows. Where here you had strong buy impulsive move, not as aggressive bearish impulsive candle. You have some bullish candles in between. Like it's very corrective. You have this last weekly candle closing extremely weak and bearish, still rejecting the zone. This candle potentially closing bullish in the next day and a half, 2-day period, if it holds up like this. So once we break out of that corrective structure, which here we never did, but once we get that validation here, which we might do, it's a nice swing trade potential, even from 1.2 back to these highs and then above there. All right. So the upside route is if we have those technical confirms I just told you guys at those significant price points for those longer term investment trades, alongside continued macro market optimism, which is we're going to identify from overall stock markets being bullish across most regions. COVID fears continuing to be digested and priced in, and economy slowly opening back up, continued flood of vaccine headlines. Brexit optimism still holding as a positive impact for Euro and GBP, like when we did our GU and GJ analysis. Okay. Yeah, 1.199. I set that alert. We already have alerts set here. It's just not showing on the screen, but those are the significant price points. We need to clear below here to show a break in structure, which we haven't. We pretty much went to retest there. This is a very strong liquidity zone where we went to go print a new high. So we had some very aggressive profit taking by buyers in this pullback structure, but it came from a high and we haven't broken structure yet. Once we break this corrective bear structure, especially clear above 1.199, it's a nice ride back to these highs. Once you break those highs, you're soaring with that economic recovery. Higher time frame swing sells would only be below 1.163 with fear, uncertainty, and doubt on a macro perspective that we can identify with all those things I tell you in the educational webinars. So those alerts are set for some swing trade ideas.